Some trading with Scott Bauer, CEO of Prosper Trading Academy. Good morning, Scott. Happy Synthetic Friday to you.
Yes, always nice to have a shortened week. How are you?
I'm doing good. I like this market that is giving us some reopening optimism.
There is reopening optimism, and you know what? I don't like it. Not in general. Not in general.
You like the reopening?
I like the reopening. I think this upgrade on Delta gives us a real good opportunity to sell it and to be bearish. You know, you just mentioned in terms of where it's trading from a technical standpoint, a little bit difficult because it did break through the 50 and the 200-day moving averages on the upside, but has not broken out. We still continue to see, going back 6, 9, 12 months, a series of lower lows. It has not broken that yet. So I'm looking at this resistance area up there right around, 43 or so, right above where we're at. And I think that we're going to hit a brick. I really do. I like the overall optimism. I love what you guys were talking about. I love this optimism. Again, though, I just think this is an opportunity to fade this optimism in this particular name. And I can do it really cheaply, which is why I'm doing it.
Okay.
So I can go out a month to the May expiration, May 20th, and buy a $4 wide put spread, the 41.37 put spread, for just $1. That gives me some really good potential to the downside. And if this thing does continue to make new highs, Oliver, my risk is $1 in this, but the reward to risk on this put spread is great. And again, I'm looking at a technical basis here, and I'm not sure that I personally agree with the fundamentals of, that the consumers are going to absorb these higher rates. You travel a lot. I've been traveling a lot, and airline fares are worse than gas prices right
Crazy.
now.
Yeah, it is.
In terms of the difference from just 3 months ago, 6 months ago to where they are now. Every fare I am looking at, this goes across all airlines, not just Delta. Every fare I'm looking at is at least 50 to 75% higher than what it was just 3 or 6 months ago. So I think that there's going to come a time here really quickly that as much as the reopening as we have, consumers are going to say, you know what, I'm going to wait this out a little bit.
So the idea here that there's just going to be too much inelasticity by the consumer, not going to be able to take these price hikes, and it's going to be a little bit before, even if they are starting to see the labor come back into the airline space, it's probably going to be a little bit before that shows up in the price of the airlines. But you're taking that kind of short-term opening here, and fading it basically in line with the previous high too. So there's a good technical, at least,
Yes.
logic here behind it.
No question. That is really what I'm looking at here. I mean, I don't always like trading on my opinion, right? Just because I think that people aren't going to pay higher prices. There's got to be another reason why I'm making a trade. And in this case, it is for that technical reason you just spoke about, that it hasn't taken out those highs and it's butting up right against it. So this is a pretty cheap way, very inexpensive way to just kind of fade this optimism and look for a potential pullback here.
Okay. And so you're buying the put spread here, and basically you're going to hold this till expiration.
I will, unless we get a nice big drop in the stock quickly here. Then I'll look to, probably take some profits off. But yeah, I'm buying myself over a month right now, which makes this really cheap.
Got it. All right. The airline bear for us this morning. Not the travel bear, not the reopening bear.
Exactly.
But the technical trade fade. All right. Thanks, Scott, CEO of Prosper Trading Academy.
Thanks.
Going the other way against the Delta move this morning.